In this video, I'm going to share with you a relatively straightforward trading strategy that gives you a lot of confirmation. And the more confirmation, the more confident you can be when you execute the trade. Now, I'm not saying that this is going to be 100% perfect every single time you take the trade. It really depends on the strategies that you're using with it. But if you use, for example, some of the strategies that I teach, obviously I can share with you exactly how it works and the best ways and the best times to make them work and when to stay away from these particular trading strategies, because there are times when the markets go through this transitional phase, whether it's consolidation, it's choppy, crazy volatility, wild market, the market reacts to maybe politicians and statements and comments and rumors. We go through that. It happens a few times a year. And we have to expect that and anticipate that. But for the most part, this is a technical setup. So with my coaching students, I get a lot of questions. And one of them usually pops up on a pretty consistent basis. Joseph, if I was to just look at one currency pair, which one would you recommend that I trade? And I would recommend, because of the depth and the level of confirmation that you can get with this particular setup, I would recommend trading the dollar yen. So the dollar yen is the chart that you see here on the right. The more confirmation that you have, the more confident you can be in the trade. The more confident you are in a trade, the more you're likely to see what the market's doing rather than just be panicked in this state of not knowing which direction it's going to go. Should you change your mind? Should you change the stop? Should you change the take profit level? There's going to be all these things going on if you're not too confident in the trade to begin with. Now again, we have to prepare for losses. Losses are part of the game. There's nothing wrong with losses. We need to minimize those losses. I don't like losses any more than anybody else does. So when I say there's nothing wrong with losses, I don't mean let's go ahead and get a bunch of losses. But what I mean is we need to have a robust trading strategy that we know that if we experience a loss, we can earn those losses back. We're not going to continue to drive lower and lower and lower and grind away at our trading account. We have to have, and we need to be using as profitable, successful traders, a system that gives us the opportunity to identify what went wrong and then go in and correct it and then get back to work, follow the plan, follow the trade after trade after trade. So with my coaching students, I have this, we have this exercise where we go through 20 trades and we want 20 trades in a row that are perfect. So we grade those trades, and what is perfect? Well, first of all, you have to be using a trading strategy that works and is proven to work year after year. So that's step number one. Once you have that system and you understand it, then you execute 20 perfect trades. If you have one that you, for whatever reason, change the entry, change the stop, change the take profit level, you got to start all over again. 20 perfect trades is an exercise that I go through with all of my coaching students, and it really does instill a higher sense of confidence with the particular trading strategy that you're executing and using, because you're not forcing trades the old school way, I guess I could say. I remember back when I first joined my very first chat room, Forex chat room back in 2001, and the chat room moderator would always say, pick a number that you want to earn, like pick how many pips you want to earn today, and let's get to work. And to me, I think that's a bad idea, because if the market just doesn't provide you the opportunity to trade, your specific setup, then how are you going to be able to make the number of pips that you selected for the day? So let's get started here. The reason, again, that I selected that I mentioned and I recommend, if you're going to just stare at one currency pair or trade one currency pair, the dollar yen. The dollar yen, you probably have heard me say in many, many of my videos that it's hypersensitive to U.S. economic data. We, on the other hand, can get more confirmation and more depth as to what's going on behind Japanese yen strength or weakness, because we use, in one regard, Japanese yen futures. This is one way to confirm Japanese yen strength. So what you see here on the left-hand chart is Japanese yen futures. Japanese yen futures, it is not a currency. It's not a cross pair. It's not paired. It's not a currency paired with another currency. It is just Japanese yen futures. These are futures contracts. When we trade futures contracts, we get to see true volume. This is real volume levels. This is not tick volume the way you see with a lot of other currency pairs with MetaTrader platform. I never trusted tick volume. I don't recommend. I mean, you look at it, but you'll notice that, for example, with the continuation breakout trade strategy that I use, that is the technique where when a candle closes outside of consolidation, above or below, doesn't matter which direction, with, let's say, some economic data, the expected trend that develops in the direction of the breakout, I need confirmation for that on that signal candle. Well, if I'm going to be trading another currency pair that I can't see volume, I can't see futures with that particular currency pair, then I've got to look at signs of strength. For example, I would immediately go to the Bollinger Band, and the Bollinger Bands need to be separating away from each other on that close completed candle, which is the breakout candle, and that right away shows me a sign of strength. And then I go down through a checklist of other indicators. But with this particular situation, when you're trading the dollar yen and you see, let's say, a breakout or you see a reversal, you get to look at Japanese yen futures, and it's going to be doing the exact opposite for the most part with volume levels. So volume, I use volume to identify and confirm breakouts. I use volume to identify tops and bottoms, 3 pushes to a high, W bottom patterns. All of that is there, and one of the primary indicators that I use is volume. And again, you can't really get volume with a lot of other currency pairs other than tick volume. So in this situation, I have confirmation. So I'm going to take you to a trade that I executed with my coaching students here. I'm going to go ahead and open up the charts, and then in a moment I'll review how you can set this up for yourself. So over here on the right hand side is the dollar yen. This is the 1 hour time frame. Now I trade reversals on the sorry about that. I trade reversals on the 1 hour chart. I'm sorry, on the 30-minute and the 1 hour chart. And I also trade the breakouts on the 1 hour chart. So with this one, if it's going to be a breakout, I want to be looking at the 1 hour chart, if that's what I'm anticipating. So I'm going to go back over here to the dollar yen. I had to move that support low right here. That's my support low. So we've got a low and a high, and then price closes just below that support low. Looks like a continuation breakout trade. If you look at the Bollinger Bands, they're separating away from each other on that breakout signal candle, and then no divergence in the CCI indicator. So those are 2 out of 3 indicators that I normally use when I'm looking for breakouts. But again, this was a relatively choppy range. It was already dropping lower, so I've got to be careful in a situation like this where it looks like a continuation breakout trade, but not a clean breakout. And what I mean by a clean breakout is that consolidation has been in place for quite some time, maybe one session, at least one session, 7-8 hours, or possibly 2 or 3, maybe even 2 days, right? When consolidation sets up like that, you can usually see the high and the low, and it stays within that range. And then once that candle or a candle breaks out on the 1 hour time frame, then we can expect price to trend in the direction of the breakout if there's, let's say, for example, economic data behind it, or these indicators technically are confirming. So I'm not going to go too deep into all the specifics with the continuation breakout trade, but I want to show you how you can start using the Japanese yen futures to confirm trades when you're executing with the dollar yen. So if we look at this, again, it breaks down below that support level. So I'm going to go ahead and go over here to the left, and I'm going to open up the Japanese yen futures chart. And you'll see how my crosshairs line up at the same location on each chart. So on this candle right here, you'll notice that I get a breakout signal candle with this Japanese yen futures chart right above that price swing high. And on that breakout candle, notice the volume levels. Massive volume levels, the highest levels that they've been in at least a session or 2. So this confirms the move and the breakout to the downside on the dollar yen. So when you see Japanese yen futures, you see price moving higher. That's yen strength, which would indicate that the dollar yen is going to be moving lower. You know that if you trade the dollar yen, Japanese yen strength is on the dollar yen chart is when price is moving to the downside. So again, there's my confirmation right there on the breakout. The same thing goes. So I set up my charts on a monitor just like this. Now we can go a lot deeper into reversals. I'm going to talk about reversals. I posted in the group the other day if there was interest in going through a program, or at least watching how I set up reversals. And I got an overwhelming response to it. So I'm putting together a training where we would use, obviously, one of the examples is going to be the dollar yen and the Japanese yen futures, and we're using Japanese yen futures to determine if we see reversals. So I'm going to teach you the reversal pattern, but I want to show you how with breakouts, this will at least get your mind working, right? It'll at least get you going with this additional form of confirmation. Volume is so important. And I remember I started trading in the beginning of my trading career, I started trading futures. And then like 3 months later, I found out about Forex, and I've been trading both ever since. And when I started trading Forex, I remember how heavily I relied on volume when I was trading futures. And I just didn't have that information when I was trading Forex currency pairs. This gives you an opportunity. If you're going to just focus in on one currency pair, I would highly recommend the dollar yen, and I would pair it up with, on your screen, the Japanese yen futures. And go ahead and try to identify whatever setup you're using and notice volume levels and start really practicing that. But again, in the next video that I drop into the membership in the Facebook group, we're going to be talking about the reversal techniques and using divergence, and also using volume to confirm the divergence and the reversals that I trade on the dollar yen, on the euro dollar. Obviously with the euro dollar, it's not going to be the same. I wouldn't use Japanese yen futures for that, but at least it gives you an idea of how you can go even deeper with specific levels of confirmation that are multiple forms of confirmation, not double confirmation. And what I mean by that is very often you see traders that they have maybe 2 or 3 indicators on their charts, and those indicators are basically doing the same thing. So they're getting double confirmation. They're not getting multiple forms of confirmation. This is very different. This gives you an opportunity to really go a lot deeper into specific levels of confirmation with these trades on these breakouts or reversals. It's a highly effective way to trade the dollar yen. Again, if I was to just pick one, I would recommend trading the dollar yen. Now again, this can be used on the 4-hour chart, this can be used on the daily time frame, 30-minute, even the 15-minute if you've got a good trading strategy. Keep an eye on the Japanese yen futures. Now this platform right here is my Think or Swim platform. They do have a demo free version, and the price feed is delayed. So be aware of that. It is delayed if you see it here. So one of the other things that you can do is go to TradingView. TradingView also offers, or at least they did a little while back, even up to a month ago, they offer Japanese yen futures contracts. So again, set up the charts with your TradingView side by side. You want to see as much information as you possibly can. You want to pay attention to the trends, things like that. But this is what we're really after, is more confirmation that we can't get with a lot of the other currency pairs that we trade, because we're looking at futures volume. We're looking at volume levels here with the Japanese yen futures. So I hope that helps. I hope that gets you really going and gives you some ideas. Again, the Thinkorswim platform is it's an awesome platform. I use it to trade futures, gold, oil, silver, index futures, Japanese yen futures. The list goes on and on. It's a great platform. It takes a little bit of time to get used to, so if you're not willing to spend a great deal of time learning some of the mechanics behind setting up your charts with Thinkorswim, go straight to the TradingView and then locate that Japanese yen futures option and then set up your charts in whatever manner it is that your trading strategy. Use the same indicators, try to get the same, and look for the same setups here on the left hand side. Obviously they're going to be the exact opposite, but it does give you confirmation. So again, look forward to the divergence training. We're going to be using futures, teaching divergence on the currency pairs, but again using futures contracts with the Japanese yen futures and the dollar yen.